friends, I'm delighted to share with you that Baroda BNP Paribas Balance Advantage Fund has just completed 5 years. Thank you so much for all your support and participation through this journey. Over the last 5 years, the fund has remained true to its objective. Through the equity market volatility, be it through COVID period or the war or the geopolitical tension, interest rate hikes, the fund has managed to actively manage portfolio between equity and fixed income. Thank you so much for your participation. Look forward to your continued support.
Baroda BNP Paribas Balance Advantage Fund has completed 5 years. Our investment team has designed a proprietary model which decides the asset allocation, whether to increase the debt exposure or add more to equity based on a few fundamental parameters. We had backtested these parameters over 10 years of data before finalizing on the parameters and its weight. Of course, we now have 5 years of actual fund performance, and the track record is a reflection of the performance of the model as well. True to the label, the asset allocation is decided by the model. There is no human intervention, and the role of the fund manager is to decide on the sector and stock selection. This was tested during COVID, when, during the periods of extreme uncertainty, the model asked us to increase the equity allocation. Equity allocation increased from a low of 45% in Feb of 2020 to over 80% in September 2020. This disciplined approach has helped the fund and its investors. Active equity component of Baroda BNP Paribas Balance Advantage Fund is managed on a core investment philosophy of BMV. That is, we look at business which have a moat, look at the quality of management, and focus on valuation. The relevance of this fund is more prominent now, considering the uncertainties that we are witnessing. Post-COVID, we have the ongoing Ukraine war, US banking crisis, and now the Israel war. To sum up, I see 5 benefits for investors looking at Baroda BNP Paribas Balance Advantage Fund. 1. There is no need to time the market. The model does that job. 2. The fund invests in asset classes with lower correlation. 3. The rebalancing is done on monthly basis and hence is dynamically managed. 4. It aims to capture a large portion of the upside. And finally, it enjoys taxation benefit available to equity fund investments. Thank you once again for trusting us with your money. May your financial goals be realized through this fund.
Hi friends, wish you happy Diwali and a prosperous new year. Debt allocation is a result of outcome indicated by proprietary model used in case of BAF. The basic investment philosophy followed in case of BAF on debt side has been to run a defensive position as far as credit as well as interest rate risk in the fund goes. Hence, we run a moderate duration range with a healthy blend of accrual by having exposure to well-rated credits. The low to moderate duration range allows us to navigate the interest rate risk across market scenarios, and exposure to well-rated and research bond assist us in maintaining healthy carry along with required liquidity to manage the duration. The ultimate aim of debt allocation is to maintain good liquidity in the fund, deliver a healthy accrual, and manage interest rate risk across interest rate cycle. This allows the fund to perform better on a risk-return basis. Currently, the fund runs a moderate duration of say around 2 to 2.25 years and a healthy carry of approximately around 810 to 825. As we expect rates to stay sticky at current levels considering global as well as local factors like evolving geopolitical risk, global monetary policy impact, and inflationary parameters. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.